begin with a monster day for retail where something very interesting happened. Check out shares of Home Depot, TJX, Kohl's, Urban Outfitters, all beating on EPS estimates, but missing on revenue. The stock's having a mixed reaction to those results today. Urban Outfitters, the big after-hours mover since they reported after the bell. So which of these retailers is telling the true story of the health of the American consumer? Guy, what do you say?
That's a great question. The health of the American consumer. We can debate whether or not the consumer is healthy, whether the consumer is not healthy. But the one that tells the real story to me is it comes down to Home Depot. I will tell you that if we had a conversation last night, Mel, and you told me all the numbers that Home Depot is going to report today, and you said, where's the stock going to go? I said, stock's down 3%. Exact opposite happened. So I guess the market's giving Home Depot a pass once again. Again, if you look at merchandise inventories, up 5% year over year. Sales growth wasn't there, yet their margins improved. So a mixed bag for Home Depot. Given their valuation, given the tape we saw today, the fact that the stock's up today tells me, you know what? The stock wants to continue to go higher. So typically I'd say take profits here. I think you got to stay with it, given what we saw today.
In 3 months going into this report, the stock was up about 14%. So it's not like it was super soft going in, and here they are with a rally.
Here they are with the rally. I mean, they're a premier operator, right? So they should trade at a good multiple. They do trade at a really good multiple. I agree with Guy. I was surprised at the strength. I wasn't surprised at, when they pulled out some of the things that caused the weakness, right? Talked about lumber prices being a lot softer, even though that's not a huge deal for them. That was, I think the street was expecting that. They had telegraphed that earlier. I was a little I agree with Guy. I thought it was going to be down. But then if we look at something like Kohl's, Kohl's wasn't terrible. I was surprised how much it was down. It wasn't a disaster at all. And it is really not like Kohl's was priced to perfection and they had to deliver. It wasn't like that at all.
And I think that's the difficult thing about this retail earnings this week is, where you thought there would be strength. Like, let's talk about TJ Maxx, right? Everybody's talking about how well TJ Maxx going to do in this environment. Retailers aren't doing well, but they're going to get all the deals and everybody's going to go there. Yet TJ Maxx didn't do well. Then all these other companies come out, and where you thought they would do bad, the stocks actually did fairly well. So I think this is more a comment on the confusion that's going on in the market. We're in this kind of period where we don't have a lot of clarity on a lot of different things, and it's just how people are trading. It has less to do with what the U.S. consumer is doing and more to do with how stocks are trading at this point in time.
So I mean, look, the consumer is going to get a tailwind from the housing market. They are going to get a benefit from lower interest rates. And as far as I'm concerned, first of all, just in the broader picture, consumer confidence, if you look at the correlation of consumer confidence and the NAHB index, the Housing Bureau index, they're very closely aligned. Until that really breaks down, I think the consumer's in fine shape. When you look at actually the dynamics of lower interest rates and what that means for certain parts of the country, not all, that are doing much better. There actually is a bit of bifurcation there. But for Home Depot, look, the trends for housing spend, I think, remain extraordinary. So, yes, there was some one-off, I think, transitory, whether it's lumber deflation, whether it is the fact that these guys actually are seeing some other price input pressures. They have vendors who have the ability to adjust their manufacturing to other places, unlike many other retailers. And in terms of competition and in terms of the competitive landscape, right now, I like Lowe's too, but they're so far ahead of Lowe's and they have no other competition. And then the professional services is a chance where they're actually seeing some margin improvement. So the fact that they beat on the EPS, some of that was a tax gain. We'll talk about payroll tax later, but I do think that these numbers were very good, and Home Depot is for the long haul.
Yeah, I mean, Lowe's, some would argue that that's a turnaround story. And so if they're seeing the positive trends that Home Depot is seeing, plus they've got that booster of a new management team pretty much that's been replaced, over the past year or so, then that's why you would be in Lowe's.
Yeah, I think so. And people want to make the comparison. They're two different. I mean, you've been in both. I mean, I'm a Home Depot type of guy.
I've actually never been in a Lowe's.
You've never been in a Lowe's?
Only a Home Depot.
It's a much different experience. I mean, Home Depot, you go in there,
where are you getting your Flex Seal tape, guy?
I'm going to the Home Depot, and I might walk out with a drill or a hammer just because.
Some braids
impulse buy. But I say that in jest, but it happens to be true. Quickly back to Kohl's. I mean, Karen brings up a great point. It wasn't a disastrous quarter. This was a $75 stock in April. Valuation is not ridiculous. I get it; they have no earnings growth, but the fact that they leaned on this stock today on the back of that quarter, you know what it tells to me? It means the shorts are going to lean into these retailers that just come in okay, and the good ones are going to continue to get a pass, and that's what you're seeing now. So Kohl's with a 12% short interest. You know what? They're going to lean in on again tomorrow.
The commentary actually was pretty positive when it came to tariffs. There wasn't much that they could pass on to the consumer at this point because they worked it out with their supply chain.
Right,
That's
but we
positive.
don't know going forward. Also, they plan on doing a big, I think it was $300 to $400 million buyback. So, I mean, there was a lot to not hate, for sure, and yet people seem to hate it. One other thing, though, tomorrow we'll see Lowe's will report, Target will report. So we'll see how Lowe's does versus Home Depot. Remember, Lowe's had trouble with pricing before the tariff stuff got going. So we'll see how they do there. And Target, we'll see, are they going to be like Walmart and continue to really leverage on their online business? Hopefully, I hope they are. This will be interesting to see. The department store thing, though, it seems like you're going to be hated no matter what you do. This was not a terrible release.
So KSS, Nordstrom, which we're expecting later this week.
Yeah, I don't think there's anything we're going to get out of Nordstrom in terms of a change in their business. They're going to talk about things around the edges where there's going to be cost savings. We occasionally talk about the chance for them to go private, but it's hard. Look, it's hard to really understand where they're supposed to trade right now. I don't think we found the right multiple. But I think with all these, and even Kohl's, Mel, when you're not in Lowe's but you're in Kohl's, I mean, what are you there to buy that you can't buy on Amazon? So you know, every one of these retailers, especially these big box guys, which are not Home Depot, because Home Depot's not competing with Amazon, as far as I'm concerned, for most of the stuff people go there to buy.
But you can return your stuff from Amazon to
That's right,
Kohl's.
to a Kohl's.
Yes.
Wow, that's sneaky.
A driver of traffic.